Hello and welcome to another episode of the CambridgeStocks podcast. Our guest today is Arafat Khan. Arafat Khan has really opened my eyes on the profession of audit and accounting, and I hope he will do the same for you. Please enjoy the episode, and I hope to see you guys at the next episode of the CambridgeStocks podcast.
Hi Arafat, I hope you're well. If you could tell the viewers a bit about yourself.
Hey Daniil, thank you so much for having me on your podcast. I've been following your channel closely, and you've been doing a pretty incredible job. So kudos for that. I'd like to introduce myself as Arafat Khan. I'm an Indian. I relocated to Boston a little bit over a year ago to pursue my master's in finance. I graduated in August from Hult International Business School. At the moment, right now, I am still in process of my strategic job search. I just took one part of the CPA exam this week and should be getting the results back sometime by mid-November. Over the past 9 years, I have earned 3 degrees. So including my bachelor's in finance and accountancy from Christ University in India, and another diploma in public accounting. That was a bridge course, because in India, a system that we have in India is that the undergrad system over there is 3 years. So if I were to have the credits and qualification of an American education that go towards fulfilling the 150 credit requirement for the CPA license, I needed to do a bridge course to have a 4-year undergrad. So I did a diploma in public accounting and the master's in finance of recently.
Is that specific, like only in the States, or is it similar in the UK? Because in the UK, the bachelor courses are also 3 years. And as far as I understand, the accounting courses are also 3 years. So if someone was to study in the UK accounting and then want to work in the US to take the CPA, they would have to study another year of accounting somewhere.
So the answer for that would be yes and no. The CPA is structured wherein each state board has different rules and regulations and different academic criteria. So each state has a different, so the way the CPA course is structured is that the examination and the licensing is split. So the examination is done by the AICPA, which stands for the American Institute of Certified Public Accountants. And it is a uniform CPA examination for all state boards, but the eligibility requirement is determined by each state board in order to be granted a license after getting done with the exam. So coming back to your question, a couple of state boards have an ease of requirement where a 3-year bachelor's is good to go for the exam. A couple of state boards have a requirement where you need to have a 4 years undergrad to be eligible for the exam, which translate into 120 credits. And then you need an additional 30 credits to apply for the license. Yeah. Okay. Yeah. So 150 credits would get you to exam and the license.
And the license. Okay. And that is for Massachusetts or New York, or both of them, the state boards?
Oh, for both. Yeah.
For both. Okay. When people talk about accounting and going into a career in audit, a lot of people find it really dull. Even the people that study, like I had accounting in my bachelor's as part of my degree, find it quite dull. What is the job like? Is it actually dull a lot of the time, or how do you find it enjoyable? What aspect of it do you actually enjoy?
Okay, so it is a pretty different mindset. So a core accounting function would be that you are siloed into the accounting department of a large corporation, and pretty much most of the transactions there would be repetitive with respect to monthly closeout functions and control over financial reporting. And then if you take a step over, then you really get into the big leagues, what they call the technical accounting group. So what the technical accounting group does is consolidation of all the entities, subsidiaries, and revenue reporting and hardcore financial reporting of financial statements. So that is pretty much the accounting function. And with respect to audit, you are not within the organization. You are an external observer who comes in and evaluates the financial credibility of the statements, whether they represent a true and fair view. Because investors refer those financial statements in order to make judgment, and there are a lot of stakeholders that rely upon the true and fair nature of those financial statements.
Yeah, of
I
course.
mean, I can pump out a balance sheet and, do something, what we call in the practice known as window dressing, make a better picture than actually is.
Window dressing?
Window dressing.
Window.
Yeah.
So do you know where the term originated, or?
That term actually originated, like, it is something like an ethical conflict where you show something which is better than actually is. So a lot of companies that take the route of having off balance sheet transactions and having special purpose vehicles to park a lot of the debt in those companies. So that is window dressing, where you show a better picture than actually is, right?
Yeah.
So you need somebody as an auditor to come in as an external capacity and exercise something known as professional skepticism, where you don't completely rely on everything that you see, and have absolutely no reservation as to not to rely. So you rely on the financial statements, but you carry out something known as audit assertions to really judge and get corroborative evidence to justify those numbers.
Okay. Do you actually like go back and try to build a financial statement and see if it matches in a way?
Yeah. So one of the audit assertion that you do is called reperformance. A pretty standard workflow for that would be a depreciation logic test. So looking at the depreciation block that the firm has reported, right? It would have the opening balance, the opening WDV, the written down value, and then addition and deletions to that block. Then the depreciation that would give you the ending value, right? So you go in and scrutinize the ledger and see if the appropriate rate of depreciation has been applied on that particular asset class, and really recompute the calculations and see if what you can compute based upon the entirety of the transaction and what is reported in the book, if those match, then there would be no reason to debate upon that.
Yeah. And depreciation is important because you can write it off and then you get a write-off on tax and et cetera. I suppose the laws for depreciation are different in different countries as far as I know. Is it very different in India, where you had your experience, to what it is in the States?
Right. So my experience working as an audit associate with KPMG in India was more inclined towards the US context, where I dealt with a lot of large corporations that are multinationals and have a significant presence in the US, because they were listed on the New York Stock Exchange in the form of American Depository Receipts.
Yeah, ADRs.
So, ADRs. So there is a pretty simple approach to depreciation. There is something known as an accounting principle and an accounting policy. An accounting principle would be depreciation, which is pretty much standardized across all accounting workflows. And the accounting principle would be the way in which that is applied. So in the US, you have something known as the MAKERS system, which is the Modified Accelerated Cost Recovery System, wherein there is a specified rate, and you apply that rate, and that would give you the depreciation of that asset class. And a pretty much industry standard is straight line method and written down value method. So it is pretty standardized, but it differs from entity to entity.
Does it happen? Because as mentioned earlier, depreciation affects taxes, and you have the principle and the way you apply it. Are there instances where auditors are hired not specifically for the tax season and to check everything before the 15th for what's called the business season in the States? Are there practices where when auditors are hired in order to minimize tax for the company that's hiring the auditor?
Okay, so there is something known as a tax audit to really understand the entity's applicability with respect to reporting and calculating of the taxes, because there are certain differences between your tax books and your accounting books, right?
Yeah.
Your tax code in the US, the IRS, the tax code would have a different rate or a different method of depreciation where you could write off a certain class of assets up to a certain level, right? So for a software company, buying a $500 laptop would not necessarily be capitalized in the balance sheet because that is insignificant. It is not significant. They would just write it off against the revenue as an essential operating element, right? So what happens with taxes is that your accounting tax would be different and your income tax would be different. And this difference in these two things causes something known as a deferred tax asset or a deferred tax liability.
Yeah,
right?
I think we did that last year.
Yeah. So this is a pretty interesting area to work in, and this is a specialized skill set that auditors are generally called upon to recompute, and it is something that is really debated with the tax authorities. So two things that really affect deferred taxes is your depreciation calculation and provisions and contingencies.
Provision. I think that like having a deferred tax asset in it's important to have it, but for a company, because that way you have essentially a cheaper tax to pay in the future because it doesn't get the inflation.
Right.
I guess currently in the US it's not. I mean, probably depends state by state and industry which the company works in. But yeah, I mean, if you defer a tax, if you keep deferring it, it's gonna basically decrease in value because of the inflation, right?
Right.
So deferring tax is beneficial to any firm essentially. Would that be true?
I mean, yes. If you have a deferred tax asset, you could offset that within any kind of tax liabilities that accrue, and then just postpone the payment of the tax, or if there is a certain threshold beyond which you cannot postpone, like in the Indian tax code, for instance, you can carry forward a deferred tax loss for about 8 years, and if you don't offset it against a gain, then you can take a refund. You can take a credit.
That's not the same in the States.
No.
So I presume that there is a lot of differences between the laws in each country. What is it like when you've had so much experience in one country, when you move to a different country? What is the transition like? Let's say you were an associate in a firm where you were working in an audit division. You come here, the roles that you will be looking at, not in terms of what people are hiring. I mean, the pandemic kind of ruined this.
Yeah.
I know a lot of people who were associates that coming here becoming analysts. What is it like here? Do you, because it's a slightly different structure, do you go back to analyst for a year, or do you just do associate but you do less of it? Like, are you more of a
right? So I would certainly not start off from where I left off from, because after my role at KPMG, I went and joined a pretty diversified real estate investment trust in India. That company was in the midst of a pretty large multi-million-dollar leveraged buyout. And that gave me an opportunity to really transition through the entire accounting and treasury function. And it gave me a lot of exposure within a really compressed time frame, right?
Yeah, because I mean, when you undergo a deal, I guess that's when audit is the most busy, right? When there's a deal happening.
Yeah. So specifically with that firm, I wasn't in the capacity of an auditor. I was in the capacity of the technical accountancy group, wherein I was an executive by the time I left. So circling back to your original question, the skill set in audit and assurance is really transferable globally, right? So especially with respect to having the incredible opportunity to get my career start at KPMG, which is one of the big four. The big four audit methodology is pretty much similar across all other firms, right? And given the added advantage that I'm actively pursuing and working towards my CPA qualification, that would necessarily give me the academic credentials to fulfill my future aspirations. Right now, the roles that I am considering are an associate or an experienced associate, if you like, because I'm not someone who is completely fresh out of grad school. I do have a pretty
significant over 5 years
almost 5 years of experience. But then if you were to translate that from an Indian context into an American context, it loses a little bit of its essence because it was more structured towards Indian GAAP with the added advantage of exposure to IFRS and US GAAP and US GAS.
Yeah, if you don't mind, actually, we'll take a little divergence here. During, I don't think you had Professor Littman.
Professor Joe Littman?
Joe Littman, yeah.
No, I did not take that elective, but a bunch of my close friends did. And I had pretty interesting conversations with them about that.
So what his method is he does his own style of uniform accounting. So he disregards the GAAP because he thinks that essentially the GAAP, whether it makes some companies look prettier on the books than others, and using uniform accounting methods, essentially he does his own GAAP in a way on the companies, and he sees what the actual, in his opinion, using his method, what the return on assets is. And some companies, like for example, Intuitive Surgical, you would see like a 50% ROA, whereas the number reported, if you look it up on Bloomberg, whatever you look it up, PitchBook, FT, the number reported would be 7%. Have you ever thought of that the GAAP method benefits some firms?
It is really good to have your own adaptation or really differentiate from the unified method of GAAP. Especially if you are an external investor and you're looking to, seek out some kind of trapped value that is hidden because of the hardcore pronouncements of GAAP, right? But it is a pretty worrying thought if an accountant or an auditor has the creative mindset with,
yeah, of course.
playing around with the books. I mean, that would be a pretty big red flag. I necessarily don't think that some companies suffer and some companies have an unfair advantage because of GAAP. The thing with US GAAP is that it is really principles based. So the generally accepted accounting principles are very well defined and they really tell you what needs to be done and how it needs to be done. But on the other instance, IFRS is a lot more rules based, where it tells you what should be done, and then it is up to the organization to decide how they need to do that, right? So I can give you an example with this. So right now with COVID, I have been networking with a lot of industry leaders and professionals amongst the big four, just to get some context with respect to, how the profession is going to transition post-COVID. And it is a definitely really interesting landscape. Once companies close the books on the 31st of December and go towards the next year, because that's when the new transactions would be entered. Previously companies did not do impairment asset testing, right? So all of the non-financial assets such as patents and goodwills and trademarks, they have to be tested for impairment, whether there is significant future economic benefit that can accrue to the entity as a result of controlling those non-financial assets, right?
Yeah.
But due to the hard-hitting impacts of COVID, a lot of companies are going to conduct a very strategic sensitivity analysis around the cash flow that can accrue to them because of those non-financial assets. And the thing with US GAAP is that once you go in and prove that the asset is actually impaired and you recognize an impairment loss, in the future, when people enter the new normal, as you like, that impairment loss cannot be reversed as per US GAAP. But as per IFRS, it definitely can be reversed. So there has been a lot of attempts by the FASB, which is the Financial and Accounting Standards Board in the US, and the and their counterpart for IFRS to really converge US GAAP and IFRS, but that has failed. There are a lot of significant points of conflict on that context.
Yeah, and I guess that's where the attention to detail in terms of working and auditing is extremely important, because you have to spot these differences. Right. What is the cost of making a mistake as a team of auditors compared to other careers? Because I can imagine that, you can essentially damage a firm that you're working on. have you ever, can you give an example of like an instance like that?
Okay, of course. So an audit is very different from a thorough investigation, right? An audit is a very structured study of the financial statements, looking to give an opinion whether they conform to all of the rules and regulations, whether they are true and fair, you know. So a key foundational technique of auditing is based upon statistical sampling. So based upon materialities. So the term materiality, for the benefit of the viewers, is that an amount that could significantly influence the decision-making capability of the user of financial statements, right?
Mhm.
So if there is a company that is in the process of capitalizing its assets, I would compute the materiality based on the capital work in progress rather than the profit that the entity has generated thus far, because it is still in process of capitalizing its assets,
Mhm.
right? So materiality is a very subjective terminology that differs from company to company, and it is computed based upon the independent judgment of the audit engagement team. And this is something that involves a lot of planning meetings, and it goes through a very, very structured phase of approval. And there are three tranches of materiality. So you have the company-wide materiality as such. So say for a company like Tesla, the materiality would be $1 billion. So anything that is below $1 billion is considered immaterial for Tesla, just because of the scope of operations.
Because yeah, so it depends on the size.
But for a smaller company, a startup based out of San Jose in California, it would be the entirety of its revenue, what is insignificant for Tesla, right? And
Yeah.
the tranches of materiality is the materiality itself, followed by the performance materiality, and then the audit misstatement posting threshold, which is known as the AMPT. So if there is an amount which is below the AMPT, in totality and on an individual basis, that amount can be overlooked because it is not something that is significant to damage the true and fair nature of the financial statements. And there is an inherent limitation with doing audits, because everything is based upon a sampling approach, where you run samples, pick up the samples, and then verify completely with diligence whether everything is true and fair, and whether it is within the framework as laid down by the law. And if it is fulfilling that criteria, then we have no reason not to believe that the entire population is tainted.
Yeah. Okay.
Right. And I have personally come across a couple of samples as part of my professional practice before that, one sample is flawed. So we do something known as extrapolation of data, where we see if what is the degree of taint or degree of tainting that this sample has on the entire population. And if that amount is greater than my audit misstatement posting threshold, but lower than my performance materiality, then I investigate that, what happened and what went wrong. And I try to gather evidence. And if the entity cannot justify that, then that is brought up in the final meeting. Yeah.
Okay. Yeah. So yeah, I can see how it's actually difficult to make a mistake, because there's so many steps to each sub step even.
Mm-hmm.
What do you think it takes to, because again, you get a busy season, and then you need this extremely high level of concentration, and it's long hours.
Mm-hmm.
Which kind of people do you see in there? And if anyone wants to go into accounting, anything to warn them about, or anything for them to look forward to?
Right. So the only thing that I would say is that, personally, I did not choose my career right out of the get-go. It was something that chose me. I went out with an open mind. KPMG had an opportunity where they were recruiting a lot of people, and I went in and applied. And it turns out that out of the 200 people that began in the cycle, there were only 3 that ended up with an offer. So it is a highly competitive environment, but it rewards exceptional performance. So the only advice that I would give to people is that go out there with an open mindset, and do not go in there with the mindset saying that I know everything, and I know my craft, I know my work. You need to be coachable. The sheer caliber of people that you work with in a big four, sometimes their work experience is greater than my age, right? So there are people who have a work experience of 28, 29, 30 years, and that is significantly higher than somebody's age who joins in at an analyst or an associate role. So, kindness, humility, and empathy are three things that could really, shape out your career. You really need to go out there and learn and have the mental stamina and vigor to complete a vast body of work within a compressed time frame. As you said, the busy seasons, I will not lie, the busy seasons are very brutal, but not everyone have the opportunity to be on a full scope audit engagement, something
But
known as an
I suppose it's very rewarding after completing all that work. And
It is really rewarding. I had the opportunity early on in my career to be part of a large conglomerate in India, which is called Infosys Limited, which has a significant operations in the US and globally. So they have like about 200 subsidiaries all over the world, even Europe. So just being part of that engagement is a really humbling experience because of the scope of work that is required to be done. And, you're working in a large group of about 20, 25 people, and you have so much of stuff to learn in such a short span of time. And by the end of it is pretty daunting to know the amount of stuff that you have learned. And then, how do you take it forward from there?
Yeah. After, even though we've had quite a short chat, I've never considered accounting as a career that would be rewarding in terms of the results. But now that I'm hearing from you, it seems like that can even be more rewarding than coming out with an analytics report, which came to be true in terms of like picking a stock or a sector.
Yeah, of course. I mean, pretty much all of the stuff that we learn through our investing banking module and portfolio management, there is a pretty heavy emphasis on having a clear financial literacy, right? Because you can't just go out there and pick a stock based upon market sentiment. I mean, you have better odds winning the Powerball by doing that, right? So there needs to be an underlying a specific approach to really going out and parting with your money.
Yeah, that's just it has to be either a systematic approach or you have to know something others don't. But otherwise, as I did in my episode with the market recaps, I'm essentially saying, hey, if you want to go out there and pick stocks, make sure that a vast proportion of your portfolio is actually somewhere like the S&P or high quality. Because otherwise, at one point you figure out that no matter how smart you think you are in the markets, it's luck is a big factor. And
true.
Yeah, there's no such thing when it comes to audit. There is no such thing as, hey, I'm gonna complete this audit. And I mean, it's pretty obvious, right? In finance, when you do analyst piece of work, you give these price ranges. In this case, well, it can be your best case scenario, and the price is still the opposite of what you expected. So
yeah, and with respect to the entire workflow of an auditor, no 2 days are the same, because you are dealt with a completely different challenge with every work paper that you attempt and every client that you move from. So you are not structured within just one category of clients. You're not structured only towards tech companies, but you have an opportunity to go work with real estate companies, with manufacturing companies, with automobile companies. And that is when you really understand the differences between each of those sectors. And each team is different. Each team's style of working is different. You get to meet a different group of people just by changing your audit engagement. So I don't think that there is any profession out there that is so versatile and so dynamic, within a short span of time. It is truly a great place to start.
Yeah. And it seems so dull. For example, when I did my course, you're opening my mind a bit. I mean, I've read about audit a couple of times, but I mean, when I was studying maths with finance and accounting, I never.
The sad thing, Daniil, is that auditing is not taught in any business school, right? There is no business degree that could give you a specialization in financial statements auditing.
Well, you have to go study accounting at a university.
Yeah, so the education in accountancy would like give you the fundamental principles, but all of the technical stuff that I spoke about, that was not taught to me during any of my degrees. That is something that was KPMG that I learned on the job, and had the opportunity to be an apprentice to some of the most exceptional mentors that I have come across, right? And that is the entire attitude that you have in the Big Four, that there is a very strong and clear emphasis on continuous professional education.
Yeah, and that's part of the career. You continuously have to learn and evolve as do the accounting methods. So yeah, thanks for that. I hope you not only opened my eyes on audit, but someone else's as well. If you can give us the top three, as my last segment of each episode, top three resources, top three books, up to you.
Okay, so I would necessarily not recommend something that like, I read with respect to my academic pursuits, but I do have three books. I'd like to start off with this one that I just completed last night. It's called Ikigai. Have you heard about this?
No.
Okay, so Ikigai, it builds upon the Japanese concept of reason for being and happiness. And there are four main structures for this. So if you can find what you love, what the world needs, what you can be paid for, and what you are good at. If you find an intersection of these four attributes, then you have something known as Ikigai, which stands for the Japanese symbol of being and being happy, right? So this is an incredible book that I just completed a couple of days ago. In fact, last night. I just finished reading it last night. It's highly recommended. Another book that I would recommend is called Security Analysis by Benjamin Graham. It's a classic. It really lays down a strong emphasis on fundamental equity analysis and investing.
Do you travel with a hard copy or?
Yeah. I have the hard copy. My friend Vlad, shout out to you, Vladislav. Yeah. I hope you're doing well in Moscow. He gave me a copy before he left.
Yeah, I remember when he picked it up. He was telling me about it. He's like, I just got this book. Yeah. I could be wrong, but I think one of my guests also mentioned Securities or one of these kind of books. It's a Bible to a lot of people.
Oh yeah, for sure. And the last book that I would recommend is by an author called Robin Sharma. The book is titled The Leader Who Had No Title. And this book holds a lot of value, especially right now because of the uncertainty that we live in, because of the impact of COVID-19. It really, builds a passion for being resilient and having the right mindset to setting your best foot forward. So those are the three books that I would recommend.
Do you think leadership is like by reading a book or going to business school? What do you think? Let's say if you spend a month in business school, I don't want to take 12 months because obviously in 12 months you will develop more than just by reading one book. But let's compare 1 month in business school to reading a book that, you suggested on leadership. Which one do you think is more valuable? I'm just out of curiosity.
My answer right off the bat, my answer would be no for both. Leadership cannot be taught in a classroom environment. It is something that needs to be cultured within. Empathy, kindness, politeness, integrity, honesty, it cannot be taught in a classroom environment. I mean, the principles of ethics and integrity can certainly be discussed, but it cannot be nurtured within a person's self, right? It is only when you have close conversations within your peer group and you come across confrontations is when you nurture these kind of really important human values. And when you go out to seek a job or whatever your future role would be, people want somebody who can really showcase these kind of skills and traits, because you are working in a really stressful environment, especially right now. The roles of the future are going to be hybrid or even remote. So you need to have really clear organizational skills, really good and effective communication, and trust the process and put in the work.
Yeah, yeah, it's something that you just have to be, as you say, humble to and accumulate towards it. All right, thank you so much. It was a pleasure to have you on, and
Of course.
I wish you the best of luck in your pursuits.
Thank you so much. Likewise. Cheers.